Well, believe it or not, we are getting close to wrapping up 2021, and now is the time to start getting your ducks in a row, so to speak, especially when it comes to your taxes. This morning, we want to talk about how helping others can help you too. Here with more now are Leslie Salling, President and CEO of United Way of East Tennessee Highlands, and Kim Holley, a financial planner with Cary Street Partners. And great to have both of you with us.
Thank you, Amy. We're glad to be here.
Hard to believe we're talking about the end of the year, but I feel like this year just flew by. But now is really the time to kind of start thinking about what your situation's going to look like. Yeah,
and there's so many things to think about as we get close to the end of the year. One of those is for anyone that has an IRA, traditional IRA. Every year, if you're over 70 and a half, you have to take a required minimum distribution. Back in 2016, there was an option put into place permanently that's called a qualified charitable distribution, where you can fund those dollars rather than taxable income to a 501c3 not-for-profit of your choice. Of course, you need to work with your tax advisor, as always, to see if that situation is suitable for you. But up to a certain amount, you can put that in place, and it does not count as taxable income on your income tax statement. The charitable distribution, like I said, is for any nonprofit. And it became even more important whenever we saw the Tax Reform Act go into place, where the standard deduction was raised, which at that point in time, a lot of people are no longer itemizing. Yeah. So you can get a benefit from that through doing that charitable distribution through your IRA.
And Leslie, I know these contributions come in at the end of the year and so important and really kind of probably relied upon when it comes to United Way.
It is. I mean, end of year giving for any charity is going to be really important, and a large portion of the donations that come in to a nonprofit is usually end of year. And so, you know, it always feels good to give, but when the giver can benefit in other ways, such as saving on their taxes, you know, that's a win-win for both the charity and the donor.
And this is the time, and you can talk to, like you said, your financial planner can kind of help you, because of course everybody's situation is different.
Absolutely. And you need to always assure that if you do use this option, because we all get a tax form if you take money out of an IRA, and it's called a 1099-R, and if you have funneled any of that as a charitable distribution, your tax preparer needs to know that, because on that tax form it's not necessarily going to break down what you took as taxable income in comparison to what goes to your charity. So you just need to be on top of that and use your CPA and accountant as a resource. And IRS.gov has a wonderful website out there that you can get information about any of the options that could be beneficial.
All right. Well, certainly some good information.